Right, so we are back, everybody. Happy New Year's. And, it's been around 20 days since my last video. And I wanted to take a break, and I hope you guys took a break as well from the charts and from everything and just enjoyed your time with family or your friends. In this video, I'm going to be. Um, I'm gonna be trying to force you to use Power of 3 in 2025 because over the last couple of years, I have found this strategy that I'm about to teach you. I've already taught it before on my YouTube channel multiple times. If you watch my last video, it is on the same topic, but I'm gonna go into much more detail in this video. So we know that each candle has a power of 3. And to summarize this first for the new viewers, a power of 3 is basically accumulation, manipulation, and then distribution. This move happens in 95% of the candles. So 95% of the candles are going to have this play. Our goal is to enter somewhere around here so we can catch the expansion to the upside. But a lot of people will not teach you this. They just tell you, okay, look for accumulation, look for manipulation, look for distribution. But the real question is, how do you identify the valid accumulation phase? How do you identify the valid manipulation phase? And how do you actually identify a valid expansion phase that you can utilize, right? No one is going to tell you that. But I promise you, I'm going to teach you everything in this video, right? So, we are going to be using two time frames, right? And we can use this with the weekly candle. So we can try to catch the weekly candle power of 3, or we can try to catch the daily candle power of 3. We can also try to catch 1 hour power of 3s, but I do not recommend it if you want to see consistent results and if you want to see a higher win rate. And I know a lot of people, when they get around 40-45% win rate, they think the strategy doesn't work. So I know there are some people who watch these videos, right? So if you want like a 60% win rate, 65% win rate, or even higher, then try to catch the weekly candle power of 3 or the daily candle power of 3, right? Very simple stuff. So let us assume that this right here is the daily candle. Now, before we try to catch the daily power of 3 or weekly power of 3, we want to identify the bias, all right? Because this is very important. We have to identify the bias. So, to do so, we are going to use the previous two candles, right? So, let's assume that this is the daily time frame. We're going to be using the previous 2 days to identify our bias. Very simple stuff, all right? Now watch this carefully because this is the meats and bones of the strategy. I hope that makes sense. So we are going to catch the power of 3 of the third candle, which is going to open here, right? But we need to identify the bias with the previous two candles. So this is the one candle, this is the second candle, first and second. These two candles tells us the bias for the third candle. And this is the candle that we are going to be trading, right? So if the second candle closed above the first one, then our bias for the third candle is going to be bullish. However, if the candle failed to close above the first candle, so if the second candle failed to close above the first candle, right, then our bias for the third day is going to be bearish. It is literally this simple. Literally this simple. But the question arises, how do you trade the third candle? And that is power of 3. And we are going to be catching our trade on the lower time frame around here. So if we zoom in, right, let's assume that this is the opening price, right? Now, when we are on the daily time frame, we're gonna drop down to 15-minute time frame. Remember that. We're gonna go to the 15-minute time frame. So we have this opening price of the third day. Now, this wick on the 15-minute time frame is gonna look something like this. Boom. So this manipulation move to the upside is this wick. But this big push to the downside is going to happen like this. So we have to wait for a market structure shift after a manipulation. But how do you identify the manipulation has ended over here? Very easy stuff. Now, this is the opening price, right? Look to the left of it. So this is the opening price. Look to the left of it and identify liquidity, right? So let's just do this, right? Let's assume that this right here is the opening price of the third day. Now look to the left of it and you are going to see, highs and lows, right? So it's going to be something like this. I don't know, right? So this is the opening price. And what do we have here? We have liquidity resting around this level. So this is the opening price. Let's just do this like that. Opening price over here. Price accumulates, manipulates, this wick goes up, takes out buy-side liquidity. That is very important. We need to confirm that we see some form of buy-side liquidity taken out on the 15-minute time frame. To confirm it even further, right, and no one is going to teach you this. Hear me out very clearly. We can use, so this is the opening price, right? Look for the most recent market structure shift before the manipulation. So this right here, this market structure shift over here, lower low, lower high, lower low, boom. Before the market structure shift, we want to use our fib from that to that level, from the last low to the last high before market structure shift. And let me just disable these to make these things more clear. Also, let's just disable 0.5. So a manipulation move typically is going to end at -2 and -2.5 of standard deviation. You can copy these numbers, or if there is liquidity at around -4 level, then there are chances that price will take that level out first and then give you a market structure shift, right? So it is literally that simple. Now, when you have the market structure shift, right, all you're doing from there is taking your entry from the auto block. And I do apologize. I have a little bit of flu. So if you see a little bit, if you can hear a little bit of coughing, then I apologize. So you're going to take your entry from the auto block, right? And you can basically go for a fixed risk to reward, which is 1 to 2 RR, or you can basically target some form of equal lows, right? So let's assume that these are equal lows around here, right? You can target these. And what's going to happen is when we are trading with the bias, you can see it's going to go like that. And you would do the same. You would look the same for you would look for the same pattern if the body, the second candle closed above the first candle, right? So then in that case, our bias for the third day would have been bullish. So this would have been flipped, right? Very simple stuff. Please rewatch the video if you didn't understand anything, because I tried my very best to explain each and everything. You can also watch my previous video, but that is on the lower time frame, and I do not recommend it for beginners, right? If you want to make consistent profits, then use the weekly and daily bar of it. Now, the question, what is the lower time frame for the weekly, right? A lot of people ask that, and that is 1 hour time frame. We're not going to be using 4 hour, but 1 hour time frame. Okay, so for the weekly candle, when we're going to trade the third candle, we're going to be using the 1 hour time frame. Very simple stuff. Now, let me give you guys some examples, and then I will end the video. All right, ladies and gentlemen, so this is example number 1. So I usually trade futures with this strategy, as I've found more success with it. Don't ask me why I don't trade Forex. why I don't use this strategy on Forex. I do use it sometimes, but if I'm seeing more success with futures, then I'm gonna trade futures. It's really that simple because I have no reason to trade Forex if I'm getting low win rate, right? And I suggest that you trade futures in 2025 because the price action is very clean. So we are going to be utilizing these three candles. 1, 2, 3. We are going to be using the previous two candles to identify our bias. 1, 2. These two candles are going to tell the bias for the third day. So look what happened. This is the first candle. The second candle closed below it. So what is going to be the bias for the third day? It is going to be bearish, right? Because the second candle closed below the low of the first candle. Now, if we mark out the opening price of the third day and we drop down to 15-minute time from here, we have this opening price. Look to the left side of it. We want to always look to the left side of it and identify, short-term lows, highs, equal lows, equal highs. Over here, what do we have? We have a short-term high that was swept. Now, look also here, we have this auto block, right? Very simple stuff. So, price pushes up. Now, let's use standard deviation to see some more stuff. So let me just remove this. We're using our standard deviation from the last low to the last high before a market structure shift. And that is before the manipulation move. So the manipulation move typically ends in -2 and -2.5 level, right? So where did price go? Into the -2 and -2.5. Do you see the accuracy over here? Then what we're doing is we are looking for a market structure shift. Right here, we have it. Now, what else do we have here? We have this auto block, continuous bullish candles that swept liquidity. That is your auto block. This is your short position right here. Stop goes right above the high. What do we have here? Equal lows. 3.69 risk reward ratio. What else do we have here? Significant low. That is sell side, major sell side. Giving you 6 risk to reward with one trade. My apologies. 6.03. So, do you see the accuracy? I'm not kidding. What I'm teaching you right now, it can literally change your life. But I know some of you, after watching this video, you're gonna watch someone else. You're gonna watch someone else's videos, and it's just gonna be a loophole where you keep watching different videos. You don't learn from one guru, and you're never gonna be successful. I'm telling you that. Okay, so let's move on to the next example now. Right. So here is another example, and we're gonna be utilizing 3 candles to take our trade. First candle, second candle, and third candle. This is on the daily time frame. So we're going to use the previous 2 candles, 1, 2, to identify our bias. Look at it here. We failed to close below this low over here. Right? We closed where? We closed here. Right? So what is going to be our bias for the third day? It is going to be bullish. So we simply mark out what? The opening price of the third day. We're going to drop down to 15-minute time frame. This is the opening price, right? Look to the left of it. What do we have? Sell side liquidity. Now, this is the manipulation move to the downside. Why this is manipulation? Because our bias is bullish. We want to use, if you want to extra confirm it, right? Use standard deviation from the last high to the last low. Look at the -4. What is near that -4 level? A liquidity pool level. Where did price go? Into the -4, sweeping out this sell side over here. Then, what do we have here? Market structure shift. Right? Then, what do we have here? Kind of a breaker block, if you would say. Right? Or there's a fair value gap. This could be your entry. Stop could go over here, no problem. If the stop is big, it doesn't matter, right? You go for 1 to 2, even though you're gonna go break even at around this level. So let's see how this plays out. And it doesn't matter if the third day is over, right? Because when you are in the trade, you can keep it running, right? You don't have to close your trade if the day ends, right? So in this case, you can see the day ended somewhere around here, but on the 4th day, our TP was hit. So let me give you guys one more example. All right, so this is the last example, and I'm on the weekly time frame this time, and we're gonna be utilizing the 3 candles to take our trade. First candle, second candle, and the third candle. We are gonna be trading the third candle. We're going to be using the first 2 to identify our bias. So if you look at it here closely, we failed to close above the first candle high, and we closed somewhere around here. So what is going to be the bias for the third week? It's going to be bearish. So we simply mark out the opening price of the third week, then we drop down to 1 hour time frame. Our bias is bearish, remember that. So this is the opening price. Look to the left of it. We have buy side liquidity. To confirm it even further, we use standard deviation from what? The last low to the last high before the market structure shift. So the manipulation move ends in -2 and -2.5. Do you see the precision over here? It is not a joke, okay? Then what else do we have? We have a market structure shift with displacement. We have this auto block over here, consecutive bullish candles. That is your short position, right? And let's see how this plays out, right? Because I don't know. Let's see. Yeah. A trade this big, you can absolutely catch it. What I am teaching you right now, I promise you, guys, come on, please stop watching other people. Even if you don't want to watch my future videos, just go and practice this model that I'm teaching you right now. I'm literally sick right now. I have flu. But I want to teach you guys because I want you guys to be successful. All right? Just go and backtest, practice as much as you can. I'll see you guys next week. Take care. Goodbye for now.